What if I told you that beneath the politics, the songs, and the long memories, Ireland has quietly become one of Britain's most important economic partners? Not an ally on paper, not through some dramatic treaty, but through something far more powerful in the modern world: money, trade, finance, people, and data. This is the story of how Ireland, once a poor and mostly agricultural country, turned itself into one of Europe's richest economies, and why today it acts like Britain's economic ally next door, even after Brexit, even after decades of tension and rivalry. Stick with me, because once you see the numbers, the corporate links, and the behind-the-scenes relationships, you will never look at that short flight from Heathrow to Dublin the same way again. To understand why Ireland matters so much to Britain today, you have to start with a simple truth. For most of the 20th century, Ireland was poor, very poor. When Ireland became independent in the 1920s, it lost direct access to the trade networks of the world's biggest empire. The economy leaned heavily on farming, cattle, and emigration. If you grew up in rural Ireland in the 1950s or 60s, the best opportunity often was not a job at home. It was a one-way ticket to Birmingham, London, or New York. Britain benefited from that movement. Irish labor helped build roads, hospitals, railways, and construction projects. Irish nurses staffed the NHS. Irish musicians filled pubs and clubs. Even then, an economic relationship was taking shape. Ireland exported people, and Britain imported their work. Then came a turning point. In 1973, Britain and Ireland joined what would become the European Union. Two old neighbors with centuries of conflict behind them, were suddenly sitting at the same economic table. But Ireland used that moment differently. While Britain still thought like a great power, Ireland treated the European project as a lifeline. It opened its economy, lowered trade barriers, offered low corporate taxes, and sent a clear message to global companies: come here, set up, and use Ireland as a gateway to Europe. From the 1990s onward, the Celtic Tiger era took off. Tech companies, pharma giants, and financial firms began using Ireland as a European base. Names like Google, Facebook, Apple, and Pfizer built major operations, routing investment, jobs, and profits through places like Dublin and Cork. But here's the twist. A lot of that money, a lot of those decisions, and a lot of that talent stayed closely tied to Britain too. Even as Ireland became richer and more globally connected, its links to the UK economy quietly deepened. Now, let's talk trade, because this is where the secret ally idea really starts to make sense. For Britain, Ireland is not just a friendly neighbor with good rugby teams. It is one of the UK's top export markets. In some years, the UK sells more to Ireland than to much larger countries, including some European Union members that look more important on a map. And from Ireland's perspective, the UK remains one of its biggest trading partners. Irish supermarkets sell British brands. British factories buy Irish food, chemicals, and components. Energy, manufactured goods, and retail products move back and forth every day. Look at ferry routes between the two islands, and you are not just looking at transport lines, you are looking at economic arteries. Lorries filled with pharmaceuticals, electronics, machinery, and food travel constantly between ports like Holyhead, Liverpool, Fishguard, and Dublin. For small and medium-sized businesses on both sides, this trade can be the difference between surviving and shutting down. A clothing wholesaler in Manchester supplying Irish retailers. A dairy processor in Cork supplying a major UK supermarket. A British engineering firm installing equipment in an Irish plant. And what makes it even more striking is how invisible all of this is. When you walk into a Tesco in London, you do not see a big Irish flag on every pallet. When you step into a chemist in Dublin, you do not see labels saying "made with UK components." But behind the scenes, the two economies are connected by thousands of contracts, supplier relationships, and long-term partnerships. In practical terms, they often behave less like distant countries and more like two tightly linked regional markets. That is not what you would expect, given the political history. But money does not care about old grudges. It follows what works. Now we reach the moment that could have torn this relationship apart. Brexit. When the UK voted to leave the European Union, Ireland suddenly became the only English-speaking country fully inside the European single market. It stayed in the euro, it stayed under EU rules, and it kept full access to European trade and financial services. On paper, that looked like bad news for the UK-Ireland relationship. The risks were real: customs checks, diverging regulations, and new barriers to trade, especially through Northern Ireland. But look at what happened after the vote. Ireland made a smart move. First, it positioned itself as a bridge, not a wall. For companies with big operations in London but customers across the European Union, Ireland became the natural backup plan. Banks, insurers, asset managers, and tech firms opened or expanded offices in Dublin. They moved certain legal entities, licenses, and compliance functions into Ireland to keep access to the single market. At first glance, it can look like Dublin was simply taking business from the City of London. That is the easy story. The deeper story is more interesting. In many cases, firms did not leave London. They paired London with Dublin. London kept many senior teams, major decision-making, and global financial activity. Dublin became the EU-compliant base for regulated functions, licensing, and certain operations. That created a financial corridor, London and Dublin working together inside the same corporate structures. And the professional services world, law firms, accountants, consultants, made a fortune building these arrangements. Brexit also triggered something else. To protect peace in Northern Ireland, the UK agreed to a special trading setup. In simple terms, Northern Ireland kept easier access to the EU market for goods while still being part of the UK customs territory. So the only land border between the UK and the EU, the Irish border, became both a political headache and an economic opening. Companies that can operate smoothly across that border, understand both rule books, and manage logistics without drama are in a strong position. And who is best placed to do that? British and Irish firms that already trade together, already know each other, and already have people on both islands. Now let's move from trade and politics to finance. Dublin is sometimes described as a mini London for certain parts of the financial world. It is a major center for investment funds, aircraft leasing, and European operations for global banks. Take aircraft leasing. Ireland is a global leader in this niche. A large share of the world's commercial aircraft are owned or managed by Irish-based leasing companies. But many of the investors, financiers, and specialist advisors behind these deals sit in London, New York, and other major hubs. So you can end up with a plane flying in Asia, leased through an Irish company, financed by a British bank, insured in London, and structured by Irish and UK lawyers working closely together. The same pattern shows up in funds and asset management. A fund may be officially based in Ireland to use EU rules and tax treaties, but investment decisions, risk analysis, and strategy can still be run from London offices. This is where the phrase secret ally really fits. On the surface, it can look like competition. Dublin wants financial business, London wants to keep its crown. But inside real corporate structures, the two often cooperate. British law firms have major Dublin offices. Irish firms keep strong London presences. Staff move back and forth. Teams speak daily across the Irish Sea. Both sides get something valuable. London gets a friendly EU jurisdiction that helps it stay connected. Dublin gets access to London's deep capital markets, global networks, and experienced talent. So it becomes less about London versus Dublin, and more about London and Dublin operating together in a global race. We cannot talk about Ireland's economic role without talking about tax and big tech. For years, Ireland's low corporate tax rate, long associated with 12.5%, helped attract some of the world's largest companies. Tech firms, pharma giants, and digital platforms used Ireland as a European, and sometimes global, base for profits and headquarters functions. Britain often viewed this with mixed feelings. On one hand, Ireland's strategy attracted investment that might have gone elsewhere, possibly even to the UK. On the other hand, many of the same companies routing profits through Dublin also built huge operations in Britain: distribution centers, offices, research labs, data infrastructure, and logistics networks. Here's how it often works in real life. A large US tech company bases its EU headquarters in Dublin for tax and regulatory reasons. It sells services to UK customers, supported by local teams in London, Manchester, Edinburgh, and beyond. On paper, profits may appear in Ireland, but the sales jobs, support roles, and a large slice of day-to-day activity often sit in Britain. So even where Ireland looks like a competitor, it also acts like a partner in a shared ecosystem where both countries earn wages, attract talent, and build industries around the same global firms. And this matters at the G7 and OECD level too. When global rules like minimum corporate tax standards or digital tax reforms are discussed, Ireland and the UK, whether they say it out loud or not, share a common interest. Do not scare away the multinationals. Both countries want to stay attractive, stay connected to global capital, and keep major companies anchored in their economies. They negotiate separately, but the economic logic pushes them in a similar direction. So far, we have talked about trade, finance, and tax. But there is another layer that makes Ireland Britain's secret economic ally: people. For decades, workers have moved between the two islands with remarkable ease. Under the Common Travel Area, which existed long before both countries joined the European Union, Irish and British citizens can live, work, and study in each other's countries with far fewer barriers than most migrants face. That means an Irish student can study in London or Glasgow. A British graduate can move to Dublin for a job in tech or finance. A software engineer might start in Dublin, transfer to London, then return to Cork while working remotely. This creates brain circulation, not brain drain. Skills and experience flow both ways. Someone who works in Dublin for a global tech firm may return to the UK to build a startup that still depends on Irish partners. Someone who trained in the City of London may go back to Dublin and help shape financial rules that still feel familiar to British institutions. The two labor markets also understand each other. Shared language, similar workplace culture, and overlapping media all reduce friction. For a multinational planning its European workforce, being able to treat London and Dublin almost like one extended talent pool is a major advantage. That is not an official alliance. No treaty says we will share our best people. But in practice, that is what happens. No story about Britain and Ireland can ignore Northern Ireland. And here, economics and politics are completely entangled. The Good Friday Agreement in 1998 helped bring a fragile but lasting peace after decades of conflict. One quiet support under that peace was economic. People could move more freely, trade more freely, and feel connected both to the UK and to Ireland within a wider European framework. Brexit shook that framework. Suddenly, there was a real risk of border checks, infrastructure, and a hard economic line across the island of Ireland. And that risk was not only about delays at ports. It was about identity, trust, and the fragile balance that helps sustain peace. So British and Irish officials, along with the European Union, had to find solutions. The arrangements that followed, from the Northern Ireland Protocol to the Windsor Framework, were complex. But beneath the technical language was a simple goal: keep the border as invisible as possible. Keep trade moving. Avoid cutting Northern Ireland off from either side. And that matters for our story because it shows something important. When pushed to the edge, London and Dublin will work together to avoid economic and political disaster. Their interests overlap too much to allow a full-scale breakdown. Northern Ireland becomes a stress test. Every time tensions rise, businesses and workers on both islands are reminded how much they depend on this quiet partnership. So what do we actually mean when we say Ireland is Britain's secret economic ally next door? We do not mean that politicians always get along. They do not. Disputes over fishing, Brexit arrangements, and old grievances still flare up. We do not mean they always share the same strategy. Ireland is deeply tied to the European Union. Britain stepped away. But here is what is true. Economically, the two systems are deeply integrated. Trade across the Irish Sea matters to both sides. Financial flows, corporate structures, and regulatory ties connect London and Dublin. The movement of people creates a shared pool of skills and ideas. And in moments of pressure, from Brexit to Northern Ireland, both governments have acted to protect that interdependence. From a global perspective, they also face many of the same competitors. European hubs like Frankfurt and Paris, low-tax jurisdictions elsewhere, rising tech ecosystems across the United States and Asia. In that race, it makes sense for Britain and Ireland to act informally as partners. Dublin gives British-linked firms a stable base inside the European Union. London gives Irish-linked firms access to one of the world's deepest capital markets and financial networks. Neither side is likely to say this in a big speech. It does not suit every voter, and history still shapes the public mood. But inside boardrooms, trade groups, and everyday business decisions, the reality is clear. When Britain does well, Ireland often benefits too. When Ireland pulls in investment, Britain often shares in the jobs, services, and spillover. That is what a secret ally looks like in the 21st century economy. Not a military pact, not a shared constitution, but a tightly woven set of interests that makes each side think twice before turning the other into an enemy. Next time you look at the map and see the water between Britain and Ireland, do not just see a border. See a busy economic highway, container ships and ferries, data cables lying quietly on the seabed, flights packed with workers, students, and executives moving back and forth. That short distance carries some of the most important flows of trade, capital, and talent in both economies. The story of these two islands is full of conflict, pain, and politics. But in the modern era, it is also full of contracts, shared projects, cross-investment, and common interests that rarely make headlines. So is Ireland Britain's secret economic ally next door? In many ways, yes. Not through declarations, not through flag waving, but through something more stubborn and practical. In a competitive and uncertain global economy, both countries quietly do better when they stay connected than when they pull apart. If you found this breakdown useful and you want more deep dives into the hidden economic relationships shaping our world, stick around for the next episode. Because behind every border on the map, there is usually a money story most people never hear.